Welcome back, everyone, to another episode of Profiles in Risk. I am your host, Nick Lamparelli. On this episode, I would like to introduce Travis Hedge. Travis is the co-founder of Vouch. Vouch is a business insurance platform for startups. Built by founders for founders, Vouch's fully digital coverage takes minutes to activate with everything from application to claims designed for the unique needs of high-growth companies. Because Vouch does all of the underwriting, not just brokering out to legacy carriers, they actively work with their members to manage, mitigate, and avoid risks. Travis, welcome to Profiles in Risk.
Nick, thanks for having me. Excited to be here.
Good, great. I like to get all of my podcasts and interviews started with putting you on a soapbox, allowing you to have an elevator pitch. Describe Vouch in your own words.
Yeah, well, I think you did a great job summarizing it, but the quick and dirty of it is Vouch is an insurance platform for early stage startups. These companies have really unique needs. Obviously, they're changing rapidly. Their business model is evolving, and so we've designed everything very specifically to meet those challenges. Whereas, frankly, this is a category that historically has been underserved by legacy insurance markets, and so we're really excited to bring not just new sort of distribution models, but really new underwriting approaches and new insurance products to these companies.
Yeah, and I can understand the hesitancy of legacy carriers for wanting to jump in. One of the issues with startups is that they're notoriously volatile. They have low survival rates. So, given that, how have you structured your business model around the fact that you could do everything correctly and right and give them the great insurance and risk management advice, but they could fail on the business side? So how do you manage that?
Yeah, absolutely. It's a great question. I think now is really the right time, and for a number of reasons, to be building this business. Right. I think the technology industry more broadly is reaching a level of maturity and impact in society where the expectations are changing, frankly. I think move fast and break things is an ethos that has been retired. Is actively being retired as we speak, and I think not just the technology industry more broadly, but entrepreneurs themselves really aspire to build enduring companies that have a positive impact, culturally and on the people that they work with. And so I think it's a really unique moment in time to be building this company, and we're really excited about it. And to answer your questions really specifically around sort of survivorship in this category, look, that's the name of the game here. There have been several successful businesses sort of built around this. I think our partners at Silicon Valley Bank being a great example of a company that has thrived and leaning into a market that many question lending to cash burning companies, and they've been able to create new business models around that. And for us, it starts with how do you acquire these companies effectively in a cost effective manner. And a lot of what we do there is really focus on being the de facto solution for the partners, advisors that these founders trust every day, and driving really high word of mouth. We're really fortunate to have an NPS that's exceeding our expectations so far, and that means that the customers are talking about us, whether it be on BookFace for the YC community or LinkedIn or in different Slack groups. That's been a really big part of our growth so far. And the other side of that is, of course, these companies fail, and there'll be a very small handful that will ultimately grow on to be really big, meaningful companies that we hope we can scale with over time. But even those that fail, there's some misnomers as it relates to failure in this category. For the most part, you see a lot of acquisitions, or what people might refer to as acqui-hires. These are events that from an investor's perspective might deliver a subpar multiple, but for an insurance company like us, it creates yet another sort of insurable opportunity around the tail risk in an M&A transaction. There are absolutely other failure risks, particularly in a correction environment, that we need to keep an eye towards. That said, a lot of these founders also go back and do it again. And so it's really important that we do a great job of servicing them, regardless of whether they're on a path to become the next unicorn, or this one might not work out.
Well, see, that's the interesting thing about your business model with startups is because on the one hand, startups do have greater failure rates. And even though that's changing over time, on the flip side, when they do become big and successful, you run the opposite problem, which is now you're going to have the big players who are saying, "Oh, well, that's a prospect for us. You're going to have a lot more competition because they are now mature." So how do you protect yourself from, I understand how you protect it on the beginning side, but as they become successful, how do you protect your business when the companies you're insuring become successful and the big players want to come in and get a piece of that?
Yeah, well, I hope that's a problem we have to wrestle with over the years. The reality is we just got to put blinders on and focus on building the best possible products and experiences for our clients, and frankly, make it next to impossible for them to even consider another solution, because we're doing such an amazing job of staying ahead of the curve there. But it comes back to focus, and that's the one thing we just have to keep driving towards.
So where'd the idea come from?
Yeah, there's a bit of a convoluted answer to that.
We love convoluted answers, so just go ahead. We got all day.
There's no one silver bullet, right? I think for me, so I grew up around the industry. My parents are both independent agents in Columbus, Ohio. They focus on employee benefits and payroll. Mm-hmm. When I was in third grade, I had sweater vest to career day, saying I wanted to be a broker like my dad.
No, you didn't.
Yeah, true story.
Oh boy.
Why they had career day in third grade, I'm not entirely sure, but yeah. Ended up taking a bit of a circuitous path, though. Worked in politics for a time, so my career spanned government, politics, and I worked at a bank. So I've got the low NPS categories really, really nailed there. But after that, went to Nationwide Insurance, helped build out their venture arm, what has today become Nationwide Ventures, and then went to SVB Capital, the venture arm of Silicon Valley Bank, where I spent the first few months really excited about all the shiny objects, AR, VR, and drones, and realized I should really go back to paying attention to that insurance thing. It's still a lot of opportunity there, and so was very fortunate to help my friend Alex Tim get Root Insurance off the ground. We invested in Ladder Life and really created sort of a practice around InsurTech at SVB. And it was around that time in 2016 that I went to SVB and said, "Hey, I really think there's an opportunity for us to build something here in the insurance category that's unique. We see the issues that our companies having getting covered all the time. We see the emergence of the opportunity to really redefine these products from the ground up." And I spent a couple of years really looking for that partner that we could work with to do it. The challenge being that everyone wanted to build a digital broker model, and at that point your hands are kind of tied to the legacy products and processes as they exist in the market. And I think to deliver the experience and the products that we want to, we knew we needed to redesign it all. And so that's where I was fortunate to meet my co-founder, Sam, who's had experience in building a company and taking it public before. Our friends at Ribbit Capital, Y Combinator, had been thinking similarly. And so in some ways, it was a very short process from when we decided to do it and then get to market. In other ways, it's been in the works for several years, and it was the right sort of people coming together at the right time to make it happen.
Yeah, and I want to dig into that a little bit because I think that's important. For one thing, my opinion is that there is no in the launch of how you build this sort of business. There isn't necessarily a right or wrong. It's trade-offs. It's trying to mix and match. Who are we serving? How are we going to serve them? Now, a lot of other entries into this market who could be potentially considered competitors are going to go the carrier route, right? You already discussed digital brokerage. Can you talk about how you balance the trade-offs of going the route that you went? Talk about your ability to balance the control of capacity, how you acquire distribution. Talk about why specifically your route was right for you.
Yeah, there's so many different answers to that. I'm actually laughing here because I remember very early on in this decision-making process listening to an Insurance Nerds podcast on captives, and it was a really, really rich conversation.
It all circles back.
Yeah. So yeah, it's a great question. I mentioned my experience with Root Insurance. Obviously, they took one approach, and I'll be honest. I think early on I was very biased towards saying we should do the same thing. The reality is we're operating in a very different market. I think, first of all, our two biggest states, California and New York, creating new carriers in those markets is particularly challenging, two of the largest markets in the country. But also we have 10 different lines of coverage. We're building really complex products. And so finding a great partner like Munich Re and State National to bring our business to market as an MGA, just as the more we looked at it, made a lot of sense. We were really fortunate to bring on John Wallace and Kelly Wolf and Melissa Gale and a number of other really key hires early on that made it so that we weren't just, taking an off-the-shelf product and marketing it differently. We really did redesign these policies ourselves, and that shows in really the product and the experience as it exists today. And to have great partners like Munich and State National to really work with us to get it there has been key to our success. But we looked at everything early on, from the lightest weight possible distribution model all the way through building a carrier from scratch off the ground, and ultimately I'm really happy with where we landed on that.
Yeah, I just think it's the area is very misunderstood, and I see too many folks wanting to drive immediately to, we need to start a carrier. But like, as you were talking, there were a few key elements that really stood out, which was your multi-line. Do you know how expensive it would be to create a multi-line carrier? Like getting that stuff off the ground is just impossible. But you hit on something as well, which was your partners were open to collaborating with you. So you talked about being able to design the policy and the coverage so that it would fit the niche market that you were going to go after. And at the end of the day, why not let the capital and the capacity do what they do best, which is dealing with insurance regulators and handling the yellow book and all that other stuff, and you get to focus on delivering the superb experience, and you almost don't miss a beat. That's kind of my opinion on it.
Yeah, I think there's trade-offs in everything, right? And a huge part of it is making sure you've got the right partners, the right alignment going into it. And that's not a trivial task, right? You really need to invest the time and energy up front in doing that. But once you have that alignment, you can move much more quickly.
Yeah.
And I think, you got to ask yourself why. Setting up a risk-bearing entity or whatever approach you take is a means to an end. And if that end is we need, greater product flexibility or whatever your factors might be, control of economics, then fine. But you shouldn't do something just for the sake of doing it. I think it's part of what you're saying there, which I wholeheartedly agree with.
Yeah. Okay, so you are multi-line. Which lines?
Yeah, so we offer 10 different lines of coverage. Starts with general liability and business personal property. It's effectively a business owner's policy. Startups need this to sign a lease to move into their first office. Yep. Their lenders often require coverages, and so it's often really one of the first milestones that you see a startup encounter. Then it's management and professional liability. So it's everything from errors and omissions and cyber to directors and officers coverage, fiduciary liability, etc. And then we have our crime policy as well, which protects, is often, frankly, underutilized by startups. You think about you're raising $10 million in capital and you've got a few people around the table. When you announce that round, that's when the cockroaches tend to come out, and that's when you end up getting the attacks and everything. So we really encourage companies to get the coverage in place before you announce the round. So anyways, those are the 10 different lines of coverage that we offer today, and it takes less than 10 minutes to apply, and it's active within 24 hours.
Did I hear auto?
We have hired and non-note auto as well. That's right.
Are you going to eventually offer regular auto? Commercial auto?
We'll see. I think it's one of those things that might be relevant for a small number of our customers versus the broader subset. And so we look at every product on a case by case basis and decide what's the best approach to getting the coverage that our clients need in their hands.
Yeah. So as you know, I'm a cat guy. I love not the kitty cats, but the nat cats. And so what do you do in situations where it's not currently a line that you currently handle? Do you do that as traditional brokerage? Find the flood policy, find the earthquake policy to kind of fit their needs?
Yeah, so we try to be really upfront with folks and clear about where we're a good fit and where we're not. And where we're not, we're happy to refer them to, a handful of brokers that we've gotten to know that we think do a really good job for startups. That said, for our existing clients that are growing quickly, to our conversation earlier, there's no way that we can handle all of their needs all at once as they scale. And so in a very select basis, we will work with partners. For instance, on the key person side of things, we really like Ladder Life and their ability to deliver a similar experience to what we do.
Yeah.
Those sorts of things for the companies that are scaling quickly and need solutions that we don't have as part of our offering, but it's something that we do very rarely for a small portion of our client base.
Yeah. So you come from an insurance family. So I don't have to ask what got you into it, but how difficult was it to get a lot of more of the tech-oriented folks to think of insurance probably differently than the stereotype that they had in their minds?
Well, apparently insurtech's like the hot, sexy thing now, right? I guess
it's just hard to believe. I can't connect that. I can't connect those dots. But you might be right.
I know, I struggle with it too. No, it's well, there's a couple things we did there. One, we very intentionally chose to be to have two locations really from day one. In Chicago, and Chicago obviously has a ton of great insurance talent. It's been a great market for us to hire there. I think on the other side of things, it's about your mission and your culture. At the end of the day, people want to be working with really smart people solving a challenging problem, and this is an extremely challenging problem. And so I think the intellectual curiosity behind that has helped us bring in some great people. But it's really about culture. And one of the first things Sam and I did was sit down and map out what are the core values that we want to really build as an organization and commit to holding ourselves accountable to. And that, I think, far and away has been critical to our success so far. And frankly, the thing I'm most proud of is the team and culture that we've built to date.
Yeah, I'd like to unpeel that onion a little bit because it's something I've been tremendously focused on lately. Let me phrase this question this way: would you have been in the similar position today if you had focused on those core values and the culture after you had gotten the company started?
No, no, absolutely not. It was part of our hiring sort of scorecard with the very first hires. And I think back to, Kelly Wolf, our general counsel. She embodies, so many of our values that might we have found Kelly anyways? Sure. But having those things in place made, frankly, decision-making and communication far more straightforward between Sam, myself, early team members to calibrate around what we're looking for. So I think we would have had a higher miss rate on our early hires, and every hire is so impactful at this stage that I think, it's just really important to get that right. So, no, it's something I feel really strongly about. And I'd add, part of the reason that I feel that way is that I was able to really benefit from Sam's learnings of building a company prior to this. And so having that, whether it be within the company or those advisors you lean on to help craft that early on and build the values and culture that you want, I've found to be just critically important.
Yeah. How much different is it hiring folks? So, there are so many stories about, you have the successful Facebooks and Googles, and there's so many stories of really successful tech entrepreneurs that have created tech companies and have kind of distilled that sort of culture and hiring practice throughout tech, but, it's gone into other industries. How much different is insurance from a tech-only company? You have to hire not only some tech-savvy folks, but also folks to handle the day-to-day insurance-related stuff and handling customers, which, frankly, when they're buying insurance, can be extremely fickle. So, how did your hiring and culture? Did it need to change, or was it? Were you able to define it in such a way that it did resemble, one of your co-founders' prior businesses? Were you able to kind of keep that continuity, or did you have to change it a little bit to fit this different niche that you were moving into?
Yeah, I think that fundamental challenge is something that I'll talk about the values first, and then how we've gone about sort of building the muscle around this. But that's why I think listen, challenge, and learn, and do the right thing are two of our most important values, because when you have so much cross-functional coordination that needs to happen, and frankly, the insurance side of the business and the tech side of the business and distribution all operate on different cycles. And so if you don't build a really strong culture around, challenging each other and thriving as one together, it's going to be really hard to make it work. And so I don't know how much it informed necessarily the core values that but it definitely informed the values that we focus on and that we emphasize. And I think that cross-functional collaboration has been just critical. And we're not the only you hinted at this, but we're not the only category that deals with these challenges. We're seeing companies innovate in very challenging industries every day, whether it be transportation. I mean, let's talk about Uber and Lyft for a second, right? They put hundreds of millions of dollars, in the case of Uber, north of $1 billion at this point, towards insurance-related activities because they had to, because they're innovating in new categories. We see the same thing in manufacturing, other parts of financial services, the legal profession, et cetera. I remember there was a Reed Hastings quote from a few years ago where he said basically it's no longer enough just to have that technical talent. It's got to be the mix of some other deep experience. And frankly, I look at our friends. I always used to look at our friends at Root as a great example of this, of having two founders, one from the insurance world, from the digital world. They were able to bring that together, and that experience was definitely heavy on my mind as we built out Vouch and had to put the right complementary pieces together so that all the key functions can really work as one in driving the business forward.
Yeah. No, that's I learned a lot there. Like that's a lot to unpack, and I think that's it's so critical for those that are listening that want. There's so many folks that listen to the podcast and then they reach out. They want to start something, and I think they spend an inordinate amount of time. It's a lot of work to kind of get it set up, and you almost think of the culture as an afterthought. Like that's the easy part, and it's actually the hardest part. Like you can't. A team and coordination is the hardest part, and so you can have the best tech in the world, the best product in the world. If you have a shitty team, it's not going to work. But you can have a great team and a bad product, and you could still make it work.
Yeah, one of the best studies I've seen around this, and again, this isn't a perfect data point, but I think it's interesting. Berkeley and Stanford did they teamed up to do a longitudinal study on early stage technology companies. So over the course of 15 years, they looked at technology companies versus comparably sized companies in other industries. So 100-person tech company, 100-person manufacturing company. What they found was that they looked at HR resources, so spending on HR resources, training, etc. They found that tech companies on average had half of the HR resources, so half the sort of investment in their people and that culture we talked about. And yet, those companies that had comparable HR resources and investment were 40% more likely to go public and 40% less likely to go bankrupt. And so to me, that just speaks to the power of investing in your people, because they're your greatest asset early on. And now this is a little bit self-serving. They can also be your greatest liability if you don't do it right. And, we see companies are 6 times more likely to get sued. If you just look at the claims data, they're 6 times more likely to be sued by an employee than they are to have a loss from a cyber event. And yet think about the mind share that we have in the industry today in cyber versus employment-related issues. And so, I could talk all day about this.
Yeah. So how much does you being a startup help you in advising startups, and how much does advising startups helps you run your startup?
It's huge. There's just a level of, I think, empathy and understanding there that's critical. We went through Y Combinator over the summer, and it was really cool to be able to test and validate a lot of what we were working on. We didn't have a live insurance product yet. We were able to test some of the risk mitigation tools that we're building. If you go to our site and you check out our startup risk assessment, that was something that we built in conjunction with our YC batch this summer, and getting that real-time feedback from founders as they were building their business. It's really cool when you look at some of the customer feedback we get, and they talk about our licensed insurance pros, which sit out of our Chicago office. They jump on Zoom, Intercom, anytime someone needs them. About 60% of our clients, despite being able to do it entirely self-serve and in minutes, still want that expert on the other side. And consistently the feedback we get is, wow, they understood my business in a way that just, frankly blows a lot of people's minds because they're living it every day too. I remember hearing from Miles on our team. He had a 30-minute call to close a new customer, a fellow YC batchmate of ours. And that founder was one of the early hires he was the first sales hire on one of the big sort of unicorns now. And he's like, dude, we spent 25 minutes talking about his early days as the first sales hire and how they made that company successful. And then we spent the last 5 minutes, tying up the insurance transaction and getting that taken care of. That's the best part of our job is just the amazing things our clients are doing and being able to sort of be along with them, and growing with them for that ride.
Yeah, no, that's it. It seems like you can build good synergy there. Like it can really amplify your model as well, and kind of continuously reinforce who you are, what you do, and make you better. I like that. I like that a lot.
Well, Nick, on that point, I mean, two of the more frustrating moments we've had in the business have been buying our own insurance. So it was literally.
You're not alone.
Yeah.
We got, as everyone that's listening to this knows, I have my own MGA, and when we got started, I was doing E&O coverage, and broker sent me a paper application. There was a PDF that didn't even have fillable. It wasn't a fillable form, so I had to print it out and use a pen to write it out. And I was like, "This is ridiculous. This is why I'm here. Like, if I weren't solving Nat Cat problems, I would solve this problem. This is ridiculous that I have to go through this."
We got to get you guys on Vouch next time, but no, we had the same thing when we needed. Well, so first to get our business owner's policy. I just remember I'm answering questions about when the sprinklers were replaced and when the roof was replaced on the WeWork I was sitting in. Like we were 3 people with laptops. And then we had to pay the carrier directly and they didn't get our check. And I mean, it was ridiculous. Then when we needed to get our license to become a producer in the state of California, you needed $1 million in E&O coverage. Okay, great. We got declined by something like 15 carriers due to financial condition because we didn't have revenue yet. Despite, we had raised our Series A, we were well capitalized. And so we wasted 8+ weeks going through the cycles of getting these carriers to understand our business when we had partners that were waiting on these experiments we were trying to run together. And it held us up for, over 2 months.
Yeah.
And just because we didn't have revenue yet, but we needed obviously the insurance to get the license, to get the revenue. I mean, it was really frustrating and, just highlighted why we were doing what we're doing.
Yeah. So I feel like, what's that movie with Dustin Hoffman in the early 70s? Wow. It's blown my mind. Where he leans in, he's basically whispering plastics is the next wave.
Robinson. Yeah. I know exactly what you're talking about.
So I'm going to whisper to you, SureTech companies, because they're all going to need E&O coverage. And if they went through, I had a chance. I used to be a broker. And so, I could speak intelligently to a carrier or a broker about why we needed this coverage. And SureTech has no shot. They need someone like you to do their bidding because they're going to be like, what the hell is this crap? So,
well,
yeah.
One of the unique things about what we do is we have over 70 unique packages for whether you're a B2C, retail brand or B2B software for the healthcare industry. We have at least 2, if not 3 different packages for InsurTech companies, depending on their business model. And so, Vouch.us, we'd of course love to serve them.
Yes, I love that. Speaking of culture, which we were just talking about, how do you hire? So what are you looking for?
Yeah, well, we're hiring across the business right now. If you just go to vouch.us/careers, we have all the different postings there across both San Francisco and Chicago. And so from an insurance ops perspective, we're looking for really seasoned, experienced insurance operators across whether, we're hiring for our chief actuary right now. We're hiring for account managers, et cetera. And what we found is of course you have to talk to a lot of people and identify those that are a great cultural fit. But we've had great success with people that are sort of the innovators and the agitators within their current companies. the second lawyer on our team, Adam Smith, just joined from a traditional carrier background. John Wallace, our chief insurance officer, definitely fits the mold in terms of someone who spent, a long time in traditional insurers and jumped right in and made an immediate impact. And so we're absolutely looking for folks that have been around insurance, that understand it, can be the experts that our clients are looking for, but also have that itch to do something, outside the four walls of the traditional carrier environment. So really excited for that. Obviously hiring for sales and business development as well, with looking for a similar sort of mix of insurance experience. And then obviously on the engineering side, we're looking for people with really high intellectual curiosity that like solving challenging problems. So again, we're hiring across the business and need great people. So we'd love to hear from any listeners out there.
Good. We'll put it on the show notes. I like to end every conversation by picking your brain. I always start off with, do you have any tools or techniques that you use to stay productive and or organized?
I try. That's the biggest struggle. I
know that. So that's why I'm asking you.
Getting priorities. Honestly, the biggest thing for me is I find things get out of control when I don't take time for myself. If I'm not exercising, if I'm not taking the time to read and write, I have a routine on Sundays where I spend a couple hours really, meditating, debriefing, planning for the week. And, if it wasn't for taking that time to take a step back, life would be all over the place. So that's the one thing for me, is just taking the time to make the investment. I've tried every tactic under the sun, whether it be my notebook, using Notion or Evernote or what have you. And, different things work for different points in time, but it's about making the time investment for me.
Yeah. Are there any books that you have found to be particularly inspirational? And it could be business and or personal lives.
Yeah, there's a number of books. I think the one that consistently comes to mind is the book about the Wright brothers. I think it was Walter Isaacson that wrote it. This book just stands out to me for a few reasons, but you think about the decades of work that the Wright brothers put into to getting a plane off the ground, and the personal sort of challenges they had to overcome to get there. The first book also talks about Ohio basically being the best place to be raised, and as a native Buckeye, maybe that's why it stands out for me. The Wright brothers book, I think, is a great one. I recommend to a lot of folks.
Cool. I will put all of this on the show notes. It was fascinating to listen, as a tech startup that's in insurance. So you're InsurTech, but you're serving InsurTechs and you're serving tech. You're kind of in this whirlwind of activity. So it was really wonderful to get your side of things and learn a lot about how it is you're trying to go about this. And I wish you all the luck in the world moving forward.
Nick, thank you so much. Honestly, this was a lot of fun. So if we ever cross paths in San Francisco or Chicago, would love to grab a drink or something and spend some more time on this.
Let's make that happen. My guest this week has been Travis Hedge of Vouch. Travis, thanks again.